Welcome back to the channel, everyone. Today I want to talk about the US debt ceiling not being raised, the special measures that are going to have to be implemented, and how this could cause forced liquidations and the AMC squeeze. Trust me guys, you do not want to miss this video, so stay tuned and let's make some money. But guys, before I dive into the video, I just want to give a massive shout out to the 3,000 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already so that you don't miss another video just like this one. And now I want to dive straight in with the key information. So, on Friday, the Treasury will suspend sales of securities. The debt ceiling did not get raised by Congress. It will be reinstated tomorrow. No more can kicking for the hedgies. So what does that really mean and what exactly happened here? Well, in 2019, the US debt ceiling was suspended as a result of the pandemic, and that suspension ends today, Saturday, the 31st of July. Where you can see here from Wikipedia that US debt ceiling was raised in the 80s, the 90s, the noughties, the 2010s, and in 2019 hit an all-time high of $22 trillion and was then suspended until the 31st of July 2021. If we have a look at the world debt clocks, we can see that the US currently has $28 trillion of debt, which blasted through that ceiling of $22 trillion. The other week, Janet Yellen urged Congress to raise or suspend the debt limit again by August the 2nd. Treasury Secretary Janet Yellen warned Congress that her department will need to start extraordinary measures on August the 2nd if lawmakers don't raise the debt ceiling. On Friday, there was no congressional action, and therefore the focus will turn to September after lawmakers return from their 6-week August recess. Basically, on Friday, Congress decided to not raise or suspend that debt limit and have subsequently taken a 6-week recess. Therefore, Janet Yellen is going to have to start dipping into her toolkit of extraordinary measures until they return in 6 weeks' time because that debt ceiling has been exceeded. The Treasury Department is set to start dipping into its toolkit to avoid breaching the US debt limit, as Congress still lacks a clear plan for averting default later this year. At noon on Friday in Washington, the Treasury will use the first of its so-called extraordinary measures, suspending sales of securities that help states and municipalities invest bond proceeds. If Congress don't raise or suspend the limit again, Treasury will be forced to take more special measures to prevent default. After Monday, Treasury has several additional options to avoid a default. Treasury can suspend new investments in several government funds, including for civil service retirement and disability, postal service retiree health benefits, exchange stabilization, and the government securities investment fund. Basically what that means is that they can employ extraordinary cash flow management measures, such as suspending contributions to government employee pension funds. And if they don't do that, an unprecedented default on US government debt obligations would precipitate a financial crisis. It would threaten the jobs and savings of Americans at a time when we're still recovering from the pandemic. On top of that, the timing for any extension or suspension is very uncertain. It's uncertain how or when Democrats will act. House Ways and Means Committee Chairman Richard Neal said that the House will leave for August recess without acting on the debt ceiling, and House Budget Committee Chairman John Yarmuth said there's no concrete plan on whether to approach the debt ceiling throughout budget reconciliation. Meanwhile, Treasury's cash balance was sat at $537 billion as of July 28th. The department has said that will decline to $450 billion by July 31st. That's a fall of around $87 billion in 3 days, meaning that the Treasury Department will be all out of cash in around 18 days, which is way before the committee comes back from their August recess in about 6 weeks. Now you might say, well, why is that important? Well, the Fed said firms parked $1.04 trillion overnight at the reverse repo facility on Friday. That's the first time that overnight repo facility has ever hit $1 trillion, and that's likely to continue. There were 86 bidders, including money market funds and other eligible financial institutions. Also, a failure to raise the debt ceiling would be more catastrophic than a Lehman collapse, S&P says. In fact, one economist said the scenario would be worse than the lowest point of the financial crisis. Guys, just a quick one before we go any deeper. If you haven't already, I'd really consider joining the Patreon and becoming part of the team. That way you can discuss AMC and other stocks, talking about due diligence, news articles, and just generally other updates before I even make a video. Linked in the description below. Failure to raise the debt limit would likely be more catastrophic to the economy than the 2008 failure of Lehman Brothers and would erase many of the gains of the subsequent recovery. A disruption in government spending means no government paychecks to spend at them all, lost business and revenue to private contractors, lost sales at retail shops, particularly those that circle now closed national parks, and less tax revenue for Uncle Sam. All of that could cascade through to the stock market that's seen a wave of volatility lately amid increasing expectations for a pullback. Therefore, if that debt ceiling doesn't get raised or suspended and the government paychecks are halted, it could potentially cause a market-wide crash. That's why all of these recent proposals have been made to avoid over-leveraged shorts doing too much damage to the economy. On top of that, I think it's also very important to mention this. Committee passes legislation to advance investor protections. So the committee has actually already passed HR 4617, HR 4618 and HR 4619. Now the Gov track hasn't quite yet updated, but it's been considered by the House committee and it's passed the committee. The bill then needs to go to the House, then to the Senate, and then get signed by the President and put into law. So we aren't quite there yet, but we're definitely on the way. It seems like the SEC and the DTCC are trying to prevent a wider market crash, but are trying to crack down on those over-leveraged shorts. And finally, something that I thought was very, very interesting is that AMC released a statement saying, note that at this time, to comply with US securities laws and on the advice of counsel, unfortunately we are unable to answer any questions pertaining to the trading and price volatility of our securities, including but not limited to the short selling of shares or derivatives on AMC Stock. Therefore, the SEC are clearly investigating the short selling of AMC, and therefore AMC can't comment on it any further. Hopefully, we get some good news announced soon. Guys, be sure to let me know what you think down in the comments below about the debt ceiling not being raised and about these new bills passing the committee. And if you want to pick up some shares in AMC, but you haven't even yet signed up to a trading platform, be sure to sign up with Fidelity, because they don't sell your orders to market makers like Citadel, who put them through the dark pool. Basically, don't buy AMC with Webull or Robinhood or other trading platforms that do sell your order flow. Although saying that, Webull is an excellent beginner investing service. They've got great charts, they've got news, they've got option order flow, they've got company fundamentals and figures, they've got absolutely everything. So if you do want to buy some other stocks that aren't AMC, like Apple, Amazon, Netflix or Tesla, then be sure to check out the link down in the description below to get some free shares. Or if you're from the UK, be sure to sign up with Free Trade, again linked in the description below, because they also don't sell your order flow as it's illegal in the UK. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!